right, thank you so much. All right, yeah, and as Sean mentioned, we have recently changed our name. Actually, we announced that on Tuesday. And the reason that we changed our name is to more clearly reflect our business activities. Originally when we started out and we were first publicly traded in about the first week of December of 2003, we started off as a prospect generator. And we always held back a royalty on any property that we sold. So we've always been in the royalty business, but over the intervening 14 years, we've come to realize that royalties is really what we want to focus on. All of our years in business, and I've been with the company for 10 years now, we've always constantly been tweaking the business model. And so what we've done is we've become sort of a hybrid between the prospect generation business model and the royalty business model. Let me move up here a couple of slides. And we take a three-prong approach to things, which I'll get into here in a few minutes, but let me expand on what I was saying previously. What we do is we take the prospect generation business model, and when we get we take those properties, our exploration properties, we do some basic, inexpensive exploration on those. We're not a fan of doing drilling because that's expensive. We leave that to our partners. We find enough smoke and or fire, enough indications of mineralization or outright mineralization to entice another company to come in and take control of that project and advance that thing on their nickel, and then we hold back a royalty on that. And that way, we are largely growing our royalty portfolio organically. So we don't necessarily subscribe to the conventional royalty business model, which is doing nothing but writing big checks all the time. Now, that's an expeditious way to build a royalty portfolio, but obviously, that's highly capital intensive. That being said, we do utilize or supplement our royalty portfolio through the acquisition of royalties when we can find those at favorable valuations, but that's becoming increasingly more difficult as more and more people realize royalties is probably the sweet spot in the minerals and mining sector. And the reasons for that is you don't need a lot of people to operate a royalty company. And you dramatically decrease your risks. Because when you're engaged in mining is probably the riskiest sector, although it can be very rewarding also, but you take on a long litany of risk in mining. You know, you have political risk, you have commodity pricing risk, you have social risk, environmental risk, labor risk, geologic risk, metallurgical risk. I mean, it just goes on and on and on. And largely, as a royalty holder, you eliminate all of that. So we really like royalties quite a bit. And we also engage in strategic investments. So when we find a company with an asset and we think that company is grossly undervalued, then we might take an interest in that company, and we'll take a look at one of those here later in the presentation. Just to give you some idea of what we're about, geographically we're divided up. Most of our properties in the United States, primarily in Arizona where we're looking for big copper, and in Nevada where, really we're looking for gold, where our partners are. But also we're in a lot of other places like Turkey and Serbia and Russia and so on. In terms of commodities, our focus is on the discovery of copper and gold. That's what we're best at. And in terms of assets, this is how our property portfolio is divided up. So about half of our portfolio right now is properties that are available for partnerships for other companies to pick up. And that's what we do, is we vend properties to everything from small juniors to the majors of the world. We have a lot of partners out there, including Newmont and Rio Tinto and places, people like that, and everything right down to small juniors. 40% of our portfolio is in royalty status. Most of those are incipient royalties, meaning they're not paying right now, but we do have 2 cash flowing production royalties right now. And then we have a number of properties that are partnered, but they haven't fully earned in yet, so they're not considered royalties right at this point. Moving on, you can tell a lot about a company by who they're partnered with. You can see that we're partnered with people like Newmont, Rio Tinto, Anglo, Freeport, McMoran, and so on. So we have a lot of partners, and a lot of people ask me, well, you know, do you ever find one really good property that you want to mine, and you think about holding that back and drilling that yourself and developing that? It's like, no, we don't do that, and the reason we don't do that is then you're sending the signal to your clients out there that, hey, we're only going to give you the second-tier properties, but we're going to keep the best ones, and we don't want to send that message, so we vend everything. All right, this is the ownership of the company. So about 17% of our shares are held by Paul Stevens and his various entities. So they're held in some of his funds that he manages. He also has a lot of shares in his own personal portfolio in various retirement vehicles. EMX employees, directors, and management hold about 8.5% of the shares. Sprott holds about 9% of the shares, primarily through Rick Rule, his clients, and his biggest fund, Exploration Capital Partners 2000. In fact, we just closed a small private placement totaling $7 million Canadian about 2 weeks ago, and a lot of those shares went into Exploration Capital Partners 2000. Newmont also holds about 6% of our shares. Peter Schiff's fund, Euro Pacific Capital, holds about 2.5% of our shares. And Mason Hill Asset Management, which has a hedge fund under its umbrella, holds about 2% of our shares. And then also Antofagasta, which is a large copper producer out of Chile, holds about 2% of our shares. You can see we've got about 79 million shares outstanding. Fully diluted, we're about 87 million. So for the number of assets that we have and the value of our portfolio, that's actually a fairly modest share structure. And right now, our cash and liquidity, that's actually from September, because we haven't reported the first quarter yet. We're actually closer to about probably about $8.5, $9 million there. So our biggest cash flowing royalty is in Nevada. That's called the Leeville royalty, and that encompasses 3 Newmont producing mines. They're all gold mines. That would be the Leeville mine, a portion of the Turf mine, and a little bit of the East Carlin mine. We have a very sizable land position there. They continue to make discoveries there within the royalty footprint, and you can see some of those. If I can... see that thing? Yep. Yeah, where's the beam come out?
Out the front, just like this.
Yeah. Here we go, here we go. So you can see these are new discoveries they've made here, and those are definitely underground grades. And this part right in here is on our footprint too. They've made some significant discoveries in that area also. But the bulk of the money is coming out of the Leeville and Turf shafts up here. Back in November of 2015, Newmont completed the Turf 3 vent shaft. And the significance of that is Leeville and Turf are connected underground, but they were having troubles advancing production down there because they were constrained by the lack of ventilation down there. So Newmont spent $350 million US to build a vent shaft. That shaft does nothing but pull air out of the ground. There's no production hoist on that. There's nothing else. It just pulls air to the ground. They have 4 3,000 horsepower electric motors driving the blowers to suck air out of that mine. So you can imagine if Newmont spent $350 million on a vent shaft, how much additional mineralization do you think they've identified underground there in order to be able to amortize out that capital expenditure? So this royalty is going to be paying us out long after I'm on this earth, I'm sure. Right now, we think it'll probably pay us out about $2.5 million this year. It can go up and down depending if they're on our footprint or off our footprint, but nonetheless, this thing's going to pay out for a long time. Yeah. All right, moving on to Turkey. A lot of people get a little nervous when you talk about Turkey now because of the political tumult that has been occurring there of late in conjunction with some terrorist activities that have happened in Ankara and Istanbul. But despite what President Erdogan has been doing, consolidating power and trying to anoint himself apparently as king for life, we think that even though that's certainly not good for our Turkish friends, we think it's actually good for mining because it's lending political stability to the country. And Turkey has a long, long history of mining. They've actually been mining there since before times of Christ. In fact, I was on one of our projects probably 6 years ago called Akarca, and our project manager showed me an old adit there with a stone wheel lying next to it. That's how long they've been mining in Turkey. And Erdogan is certainly shrewd enough to realize that mining is a very important component of the Turkish economy and a strong part of their culture and their identity, and they intend to keep that. So. And all of the properties that we actually have in Turkey now are all held by Turkish companies. So Turks operate fine in their own company despite what goes on in Ankara. And Balya is actually a very interesting property. It's a lead zinc silver property. Basically, we bought half of an old district that had been laying fallow for about, oh geez, I don't know, 60 years. And we picked up half of that district. That would be sort of the upper right-hand corner. You can see the boundaries transecting down there at an angle. So we're off on that upper portion there. We picked up that district, that half of the district, back in 2006 at government auction for the equivalent of about $17,000, which we thought was pretty good value. So we sold that off to a Turkish company called Dedeman. The other side of the district there in the lower portion of the image is owned by a company called Eson, who's producing that right now. And they have surplus capacity at a very large mill that they have there. So our side of the project is in a fairly low state of production right now, but they've recently come to an agreement, a business agreement with Eson next door to toll mill their ore for them. And so we think the production will ramp up pretty quickly, and we think that it also will help to facilitate Eson to buy out the other side of the district where our royalty footprint is and buy out Dedeman's interest there. They've been trying to do that for some time, but they hadn't come to terms. But things are looking rosier there, much rosier there now. If that happens, this thing is going to turn into a real ATM for us. Moving on to Serbia. Now, a lot of people don't know this, but we were actually the first people to go into Serbia after the Balkan Wars simmered down. And one of the things that Eurasian Minerals isn't afraid to engage in is political and geographic diversity and engage in some what we term as political arbitrage. So by going into Serbia after the Balkan Wars simmered down, there was a lot of opportunity there. But through our due diligence, we determined that the perceived risk in Serbia was up here and the actual risk was down there. So that presented a lot of opportunity in that nobody else was there and things were really cheap. So as a consequence of that, we put together a portfolio of properties largely around the Bor district, which is historically the largest copper producing area in Europe. and then bundled those properties up and then sold those off to Reservoir Capital, which later morphed into Reservoir Minerals, and those were their qualifying properties for their NewCo. And then, of course, later on, Reservoir Minerals made that massive discovery on the Brestovac property, specifically at Cucurupequi. That was one of the most spectacular discoveries made in the copper and gold space. Oh, geez, in 10, 15, 20 years. I mean, the grades and the intercepts there are just phenomenal. Well, the really nice thing about that is we have a royalty on that. So the property the next door, you can see this here. This was in the original portfolio that we sold to Reservoir here. This is Brestovac West. Now, that's not part of the big discovery here at Cucurupequi, but this is within 1 kilometer here. They've also had some very interesting exploration drill intercepts over here. So we have a 2% royalty for gold and silver on the west side over here and 1% on all other metals, the relevant metal there being copper. And then on this side, we were able to find a royalty held by a company called Euromax. And this was long before this discovery was really fleshed out, but we had a lot of intelligence on this because some of our guys had worked in that area right after the Balkan War simmered down and such. So they really knew what was going on there, and they thought the chances of this being a very substantial discovery was pretty high, and they were right. So we picked up a 0.5% royalty on that ground there for $200,000 Canadian. And ultimately, that thing could be, and this is obviously a very forward-looking statement, but we think that could ultimately be worth to us 100 times that, because this thing could contain, that project there could contain, you know, hundreds, or actually say tens of billions of pounds of copper and Lord knows how much gold. And Nevsun, of course, owns that now because they bought out Reservoir Minerals, and they intend to take that in production. They're saying 2019. That may be a little optimistic, maybe 2020, because the mineralization there is deep, and it's going to take some work and time to get down there. But ultimately, this thing's going to be a very handsome payout for us. Moving on to one of our strategic investments, and certainly our biggest one, in more ways than one, both financially. We've got about $8 million into this, which isn't huge, but we think it's highly leveraged to the opportunity there. And it's also a very substantial project. This is called Malmish. This is situated in far eastern Russia, down very close to the Chinese border. It's about 200 kilometers up the Amur River, which is one of the largest rivers in eastern Russia. On that property footprint there, and that's about 15 kilometers by about 8 kilometers wide, we've identified, or actually IG Copper, IGC, has identified 14 copper-gold porphyry systems on that property. So the property is controlled 51% by IG Copper and 49% by Freeport-McMoRan. We own 40% of the shares of IG Copper, which has no underlying ownership by Russians. It was never prospected during the Soviet era, and the Soviets did a lot of great prospecting and doing a fantastic job performing a mineral inventory of their country. But that being said, the tenement on this is very clear. And we saw this as a great opportunity. So when IGC needed funding for drilling to meet their commitment with Freeport-McMoRan, they needed to raise money. We came in and provided them with such, and picked up a lot of their shares because we think this is a really great opportunity. So per Russian regulation, they had to put together a resource on this to Russian standards, and by Russian standards, and this is not 43-101 compliant or JORC, this is by Russian standards, that preliminary resource, just based on 4 of those copper gold porphyry centers, is 1.66 billion tons with an average grade of 0.42%. Now that's low grade, but what makes that work is the mineralization starts at or near surface, and the infrastructure there is already in place. On one side of the property, within 1 kilometer of the property line, there's a paved federal highway, a huge natural gas pipeline, and a high voltage power line corridor. On the other side is the Amur River, and which is bargeable for well over 1,000 miles into China, or it goes right out to the Sea of Okhotsk to a deep water port within proximity to the major ports of Asia, for China, for Korea, Japan, people like that who consume a lot of copper. So this is ideally situated, and then there's rail within 40 kilometers and everything. What do we want to do with this property? We're not going to develop that. We're not developers. We're explorationists and royalty people, but what we want to do with this, it's a strategic investment for this. We want to monetize this opportunity. So we want to sell IG Copper, being the biggest shareholder, and our CEO is the chairman of the board there of this, and our chairman of the board is actually a director on the company too, and there's only 5 directors on that, so to some degree we're steering the bus on this. We want to sell IG Copper, and that will be that would go for tens of millions of dollars, if not more. And then, obviously, we would realize that capital gains through the sale of that asset, and that would make a very material difference in our share price, which obviously would make our shareholders very happy. And I've been on that project. I was there in November. It's really spectacular. And they've already got about 75,000 meters of drilling into this thing, and engineering studies and metallurgical studies and everything. So this is pretty well advanced, and we're in the process now of trying to vend this to some of the bigger companies in the world. I've been in meetings in Beijing, speaking with some very large companies, and we do have some interest in this. Nobody's written a check for it yet, but we're hoping to have that happens soon, and we have employed an investment bank to help us sell this. This is a graph of our cash burn. So the blue is the outflows. The green is things that recoveries or things we've brought in. So we recover money from our partners, exploration costs and things like that. We also have production royalties coming in. We have advance royalties coming in. So advance royalties are royalties that we collect long before a property's ever in production. So I'll go through this quickly, not belabor it, but what happens is mining business statistics tell us that from first initial exploration on a property to first pour at a gold mine, that average time horizon is 11 years. For a large copper porphyry system, that time horizon is expanded to 28 years. Well, nobody wants to hang around for 28 years to begin to see a return on investment. And we certainly don't, and we don't expect our shareholders to. So what we do is in our contracts with our partners, we structure in their advanced minimum royalty payments. So as soon as they earn in, they start paying us royalties on that asset before it ever goes into production. Once it goes into production, then they can credit back a portion of those every month until that's amortized out. So that way we're collecting royalties long before anything is being produced. So we have production royalties coming in, advanced minimum royalties, milestone payments when people get to a pre-feasibility study or initial production. Those are milestones, things along those lines. They're making payments to us like that. Annual payments on properties and management fees on properties that we manage for our partners. We get a 10% fee. And you can see how our cash burn has gone down there substantially through the years. Right now, we're just about cash flow neutral. And we closed Friday at $1.18. We think that we'll probably be cash flow positive in late this year, at the end of the year, or in 2018. And I think that once we become decidedly cash flow positive, you're going to see a very material change in the share price. And that only makes sense because there isn't a lot of companies in the junior sector that are cash flow positive, but you know, we're really building a sustainable company here, and that's what it looks like. Well, thank you so much for your time.